Good afternoon, everyone, and thank you for joining us for our webinar, COVID-19 Health and Welfare Compliance for Employers. I'm Lauren Fisher, Digital Marketing Strategist at Benefit Express, and I'll be your moderator today. This webinar will discuss the current COVID-19 pandemic, including recent guidance from the IRS and DOL on the Families First Coronavirus Response Act and other compliance topics. The presentation will also include live Q&A throughout the session, so please ask your questions at any time. Additional discussion points include the current spread of coronavirus, Coronavirus Aid, Relief, and Economic Security Act and the effect on employees and employers, filing, reporting, and compliance requirements delayed or waived, common compliance questions we are receiving from employers, and of course, our live Q&A, which you can type in the chat box below. Please keep in mind throughout the discussion that COVID-19 is certainly a moving target, especially in how it pertains to employers. This webinar discusses how your organization can remain compliant amidst the uncharted territory of COVID-19. A few housekeeping items before we get started. If you missed something, don't worry. We'll be emailing you the recording with the slides after the webinar concludes, and I will be keeping the webinar muted to avoid any background noise. We'll pause throughout for questions. So as I mentioned before, just simply type your question in the chat box below, and I'll read it aloud at the end of each section. If we don't get to your question today, we'll be sure to email you a response. ERISA attorney Larry Grugine is our presenter today. With more than 35 years experience in employee benefit law, Larry has a wealth of experience in dealing with qualified plans, health and welfare, fringe benefits, and executive compensation areas. Thanks for joining us today, Larry. We're excited to have you. And with that introduction and overview, I'll hand it over to you to get started.
Thank you very much. This has been a trying time for everyone. Over the last 2 or 3 weeks, the DOL and IRS and various governmental agencies have released a ton of stuff. There's been 2 major pieces of legislation that was passed very quickly, and because of that, we've had to wade through a ton of different things in order to really stay compliant. So as Lauren said, we're going to be talking about the current spread of coronavirus. It ticks up every day. A recent guidance from the IRS and DOL, a DOL in the Families First coronavirus. That's dealing with the sick pay and with the excuse me, emergency family and medical leave. Then I'll talk about the CARES Act, or the Coronavirus Aid, Relief, and Economic. There were substantial changes in there that it would affect you and your benefits. And what's on everybody's mind is filing, reporting, and compliance requirements delayed or waived. There are a number of filing requirements that were delayed, but the problem is some of the compliance issues that you're dealing with on cafeteria plans and other benefit programs have not been touched. So I'll touch that. And then lastly, I'll be talking about common compliance questions we are receiving from employers. I'll be touching on how to deal with some of the issues. And one of the compliance questions I get all the time is, can you take your employee's temperature? And at the beginning of the crisis, the various governmental agencies said no, and then now they're saying yes. So this is, as it was mentioned before, this is a constantly moving target. So let's get started. So the current spread, this was of last night. There's 395,000. When I started doing these seminars 2 weeks ago, it was 30,000. So it's gone up considerably, and the total deaths were 12,754. And again, that figure will go up sky high over the next week. So what are the current hotspots? Of course, New York, Chicago, Boston, Detroit, New Orleans, Philadelphia. Other areas are subsiding, the California and New York areas, and New York is starting to level off. Where I'm sitting in Oak Park, Illinois, we've had a stay-in-place order since March 16th. So we were a little bit earlier than the curve, and already, just a town I'm in has 50,000 people. We have 77 cases. So again, this is widespread. Are there any estimates of when this will end? Well, in current pandemics, it lasts between 12 and 36 months. when could social distancing end? There's estimates that if we do everything right, it could end in 1 or 2 months. The problem is we're dealing with a moving target. It could last 3 to 4 months or 4 to 12 months. God forbid it doesn't, but again, the next few weeks are going to be extremely important. Hopefully timeline 1 will win out. So let's talk about the current guidance in the Families First Coronavirus Response Act. This was passed in the middle of March. It contains new sick leave, paid sick leave, and emergency paid family medical leave. So the first question, effective date of the employment tax credits under the, this was a question, it was an open question when this law was passed, when it would be effective. And this is extremely important because if somebody goes on either paid sick leave or paid family medical leave, you are entitled to tax credits. But those tax, and the law officially is effective from April 1st, 2020 through December 31st, 2020. So if an individual employee is eligible for paid sick leave or paid family leave, you get a credit for any amount that you paid for any individual that is eligible for those leaves. So they clarified that. At first it was, some people said earlier, others said April 2nd, but they came out in Notice 2020-21 and said, no, all this is effective April 1st. What is effective date of Families First, which includes, and again, it's April 1st. As an employer, how do you know if my business is under 500? What they've indicated, they're going to use the same rules that they use for family medical leave. What they're looking at is you count all employees at the time the employee takes the leave. So you include all full-time employees, part-time employees, employees on leave, temporary employees, and day laborers. And basically you count all those, and it's the count they would use in regard to family medical leave. So you look at joint employment, integrated employment, all that to come up with the figure so you count all employees. Next, if providing child care related paid sick leave and expanded family medical leave at my business with fewer than 50 employees would jeopardize the viability of my business as an ongoing concern, how do I take advantage of the small business exception? If you're under 50 employees and there's a special exception where giving paid leave would be at a disadvantage to your business. And basically what they've indicated, you keep records of that. You don't send anything to the Department of Labor. What's probably going to happen in this circumstance is that if an individual requests leave and doesn't get it, they'll probably complain to DOL and there'll be an audit. And you have to produce the reason why you didn't provide that leave to those individuals. So if you're under 50 employees, there's a special exception for that. And next, what, as a small business, what reasons does the DOL accept for not providing leave? And they gave a whole list of reasons. They're saying the provision of the paid sick leave or expanded family medical leave will result in small business expenses and financial obligations exceeding the available business revenues and cause the small business to cease operations. The absence of the employee or the employees requesting the paid leave or expanded family would entail a substantial risk to the financial health and operational capabilities of the small business. And there's not sufficient workers who are able, willing, and qualified who are able and will be available for time and place needed. Now remember, this special exception doesn't apply if the employee is sick, only if they're going to take leave because their kids are at home. That's what we're talking about here, okay? And next, how do I count the hours worked by part-time employees for purposes of paid sick leave or expanded? It's basically what they usually average worker number of hours over over a 2-week period. And basically, therefore, the employer will calculate hours based on the number of hours normally worked. So if the employee only works 20 hours a week, that's what the leave they get. And if the normal hours are unknown, as this slide indicates, or if the part-timer schedule varies, the employer will use the 6-month average to calculate the average number of hours. So again, over that 2-week period for the paid sick leave, you can pay up to 80 hours. But again, if that employee only works 20 hours and they're eligible for the leave, then you only pay them for 20 hours. May I take 80 hours of paid leave for my self-quarantine and then another amount of paid leave, sick leave for another reason provided under the Emergency Paid Sick Leave Act? And the answer said, no, you get 1 2-week period. Now remember, this law is in effect until December 31st, 2020. So there could be a situation this fall if coronavirus comes back that somebody may want to request another 2 weeks because they didn't get sick this time, they got sick another time or a couple of times. And they said, no, everyone gets 1 2-week period. And so therefore, if they took it earlier, they can't get it again. That's what they've indicated. What records do I need to keep when my employee takes paid sick leave or expanded sick leave? The employer will consult the IRS on applicable forms, instructions, and information for the procedures to be followed for the tax credit. The employer will not be required to provide leave if material significant to support the tax credit have not been provided. So again, generally what they've indicated, you can ask in this situation, if the school is closed, information about the school being closed. If that person is taking leave because of the fact they were diagnosed as positive for coronavirus or been quarantined by a doctor, then you have every right to request a doctor's note indicating that. So just like family and medical leave, you can request a doctor's note verifying the fact that person has symptoms of coronavirus, or 2, have been quarantined by a doctor because of the coronavirus. That's if they're sick, and if they're not sick, it's because of the school. What you can do is ask for evidence that that school is closed. What documents does the employer need to give his or her employer for paid leave or expanded family leave? Provide to the employer documentation and support his or her paid leave. For example, in regard to a school closure, notice of closure, the notice posted on the governmental school or daycare website. The employer must retain this notice and documentation in support of expanded paid sick leave, including while they may be taking unpaid leave or concurrently with paid leave. So again, you have every right as an employer to request documentation of why they're taking that leave. Now, one of the questions I've been getting is, if somebody is teleworking, they're working from home, is he or she eligible for paid sick leave? And the answer is yes. If the employee is unable to perform those tasks of work required hours because one or more of the reasons for paid sick leave, then he or she is entitled to paid sick leave. Now, one thing that was very interesting is that they've indicated that if somebody is home because their children are not in school, under the sick leave, one parent at a time is eligible for paid sick leave. So in this situation, if you have 2 parents and they're both at home, you basically, one parent gets 4 hours and the other parent gets another 4 hours. They don't get the full 8 hours because of that you only pay for one parent at a time. May I take an employee paid sick leave or expanded family leave intermittently while teleworking? Absolutely. And this is what I just illustrated. If there's certain parts of the day that employee can be working, then they get paid sick leave for the period of time that they can't work. And the other hours, for example, one parent takes in the morning and the other parent takes in the afternoon. So again, as this says, in this situation, the employer and the employer may agree when they can take paid sick leave. And again, it's only for the reasons stated in the law. You have to be sick, you're taking care of someone, or your school is closed. Those are the reasons why you can take paid sick leave. Now, another question is, if an employer closes his worksite on or after April 1st, 2020, but before the employee can go on leave, can the employee take paid sick leave or expanded sick leave? And the answer is no. The problem is many businesses closed or laid off many workers before April 1st. And if your employer has shut down the business because of the closure rules in various states, and you get sick, the employer is not responsible. And what they've clarified in many different guidance, the fact that the stay-in-place order doesn't qualify. So basically, in order to get leave, you have to be working or being able to work, and one of the reasons prevents you from actually going to work. So again, if the employer closes on the work site after on or after April 1st, for those days that you're closed, there's no paid sick leave. And again, if the employer closes an employee's work site while he or she is on paid sick leave, what happens? Well, the problem is you can't work because of the employer's closure, and therefore, as this slide indicates, you must pay for paid sick leave before the business closes and after the business closes, but not during. So again, if your employer closed the business in early March and still haven't reopened, and you get sick, what this is indicating is that the employer is not responsible for paying any paid sick leave. And again, if the employer closes the employee's work site while he or she is on paid sick leave, expanded family medical leave, what happens? As this indicates, that you get paid sick leave before, and then you get paid sick leave after the business reopens, but not during the time that the business is closed. So if my employer is open, and this is a very common situation, but follows me on or after April 1st, 2020, can I receive paid sick leave or expanded family medical leave? And this says no. If the employer furloughs an employee because he or she doesn't have enough work or business for him or her, he or she is not entitled to take paid sick leave. And the reason why this is the case, because the employee is eligible for, it should be unemployment compensation. Now, the problem with that is the fact that under paid sick leave, you are entitled to a certain per day amount, plus the employee has to pay premiums during that time you're under paid sick leave or expanded family medical leave. And remember, under expanded family medical leave, it only applies if the individual's children are home because the daycare center is closed or if the school is closed. If you're sick after 2 weeks, you get unpaid family medical leave, the traditional, if your employer is 50 more employees, but it's not paid. If my employer closes my work site on or after April 1st, 2020, but tells me that it will reopen sometime in the future, can I receive paid sick leave or family medical leave? And again, the answer is no. And one thing they clarified is the fact that a state closure rule, where many states have done that, I think up to 40 states have done that, is not enough to trigger the paid sick leave. So again, if the business closes because of a state, federal, state, or local directive, and it's not a quarantine, it's just a stay in place order, that is not enough to qualify for paid sick leave or paid family medical leave. Next question. may I collect unemployment insurance benefits for the time in which I receive paid sick leave? And the answer is no. You can get one or the other, but not both. Now, what they've done in many states is that you can also get paid, you can also get unemployment if your hours are reduced. It's not the full amount, it's a reduced amount. So if you're an employee and you have to check your state rules, some states have done that. You don't have to be fully terminated to receive it. But remember, as this slide indicates, each state has its own unique rules, and the DOL recently clarified additional flexibility in states to extend partial unemployment to workers whose hours or pay have been reduced. So traditionally, you only got it if you were terminated, and if it wasn't for cause. They're opening up these rules right now, so check your state website to see exactly what it says. May my employer supplement or adjust the pay mandated under the Families First law with paid leave that the employer may have under the paid leave policy? Absolutely. But again, the problem is the employer will not get any tax credit for providing that additional leave. They only get paid for the basic leave. If the employer wants to supplement it, that's fine, they can do so. But again, they won't be reimbursed for that payment. That's what that slide is trying to say. If I want to pay my employees more than they're entitled to receive under paid sick leave, can I do so? Yes. And can I claim a tax credit? As I indicated before, as this indicates, no, you can't get a credit for that additional amount. Now, one thing also they've indicated, and they released just before April 1st, what you have to do as an employer, you have to post a poster indicating that. Now, again, if you're closed right now, you have no place to post it, and your employees are not working. When you reopen, you basically, if you're open, you have to post it by April 1st, 2020. And if you're come online after that, as soon as you open, you have to post this this notice. There is a link there to where you can get a copy of the notice. You can email it to your employees. You can post it. You can mail it to them. But the employees have to get a copy of that notice. Also, they've indicated from March 18th through April 17th, 2020, they're going to give employees 30 days to get their act together, and there won't be any enforcement of these rules until after the 30 days. So they're giving employee, so what that means is if you don't recognize these rules right away, and you don't give paid sick leave to some employees because you haven't figured out what you're doing yet, you have until April 17th, 2020 to start paying leave. That's what they're indicating. If you do so and you comply within that 30-day period, and in good faith, there will be you won't be penalized. Here, what happens is the employer remedies any violations, including making all affected employees whole. So it takes you a week or two to get started, and eventually you pay the paid sick leave. That's no problem. The violations of the act were not willful, and the department receives a written commitment from the employer to comply with the act in the future. So what could happen, what could trigger this, is that you could have an employee who didn't receive leave, and what they decided to do is complain to the DOL. Lauren, are there any questions?
Thanks, Larry. Yes, we do have a question. Linda is asking, if you have over 500 employees, do you have to post the notice?
No, because
Okay.
because the act doesn't apply to you.
Thank you. No further questions at this time.
Okay, the other part of this, these changes was the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act. And there are a number of different provisions in there that would affect you as an employer and as an employee to deal with the crisis. And let's look at some of the changes. First of all, for retirement plans, what they've indicated is that employees can withdraw up to $100,000 in emergency funds from their retirement plan accounts and IRAs through December 31st, 2020. Now, an individual is considered to be financially impacted by coronavirus if the individual was diagnosed with coronavirus, the spouse or dependent was, or, and this is a catch-all, the individual experiences adverse financial consequences as a result of being quarantined, furloughed, or laid off, or having work hours reduced due to COVID-19, or is unable to work due to lack of childcare or business owned or operated by an individual who closes and reduces. So that's a catch-all. So what that means is you could amend your 401k plan to provide this emergency withdrawals. And now, as an employer, you don't have to do this. But if you have employees that are hurting and need money, you can, again, they can use their 401k money and receive an emergency withdrawal. And eventually, if you're going to allow it, you have to amend your plan to provide for it, but you don't have to do it right away. But this, for many individuals, this may be the best source of income to pay their rent, whatever. And again, that last bullet on this slide is a catch-all. So anybody who was laid off, they can request it. So what you need to do, if you're going to do this, is talk to your third-party administrator and say, hey, what can we do to advertise this to the employees and get it out there and get started on this so they can actually pay their rent. Also, what they've indicated is if for these emergency distributions, if somebody takes it, a 10% premature distribution penalty that's usually imposed on early withdrawals will not be imposed for any distributions made after January 1st, 2020. Now, what they're going to do, as you say in the bullet below, the recipient can avoid any income tax by repaying the amount of this distribution as a rollover within 3 years. So you have 3 years to pay it back. And to the extent not repaid, it's taxable. It's taxable ratably over 3 years. So again, this is emergency funds, and the government realizes that people need cash right away. Also, if your 401k plan has a loan provision, you can actually amend your plan eventually, and you can provide for emergency loans up to $100,000. It can be up to 100% of their balance of their benefit in the plan. And loan payments can be spread over a period of 5 years and maybe delayed for a year, so they don't have to pay it completely back for 6 years. So you can do the emergency loans or the emergency withdrawals. And as this says, plans that don't need to be for emergency withdrawals, emergency loans, they don't need to be formally amended until the end of the 2022 plan year. So you have a period of time to do this, and then actually on the back end amend your plan. Also, what they've done, they suspended required minimum distributions for 2020. So if you have any participants that were required to take a distribution, those have been suspended for 2020. Also, too, there's a employee retention credit for employees. There's the refundable payroll tax credit, and provided 50% of wages paid for employers to employees during the COVID-19 crisis. The credit is available for employers whose operations are fully or partially suspended due to coronavirus. Gross receipts declined by more than 50%. And the credit is based on qualified wages paid to the employee. So again, this is additional money that you can receive as a way of funding your business. So the credit is based on qualified wages employers with a greater of 100 employees, full-time employees, qualify wages or are wages paid to employees when they are not providing services. For eligible employees with 100 or more or fewer full-time employees, all employee wages will qualify. This credit is provided for the first $10,000 of compensation, including health benefits. And this credit is provided for wages paid. So again, for wages paid from March 13, 2020 through December 31st, 2020, you can again get this credit. Now remember, if you apply for loans, you can't get both. So it's $10,000 per employee. Also, what they provided is a delay in payment of payroll taxes. Employers and self-employed individuals are allowed to defer payment of the employer's share of Social Security taxes for a period of time until 2021. Employers generally responsible for paying up to 6.2% of Social Security taxes, and this provision requires that the deferred employment tax be paid over the following 2 years, with half of the amount required to be paid by December 31st, 2021, and the other half in December 31st, 2022. So eventually you have to pay it back. But again, they give you up to 1.5 years to pay it. Now, the next provisions are amendments to your health plans. These are mandates that have to be included in both insured and self-insured health plans. Coverage for diagnostic testing for COVID-19 will be paid for completely. This testing will be no cost to the employees and will be completely paid by the plan. So if you're insured or self-insured, this is something that has to be added to your coverage, and if you're self-insured, it has to be added to your plan document. Also, there's rapid coverage of preventive services and vaccines. When a vaccine is available, it will be paid completely by the plan. So again, in 6 months, a year, or 1.5 years, when a vaccine is available, they'll make it available to the employees, to the participants of the plan, and they don't have to pay anything for it. In addition, in these sections right here, this CARES Act clarified the fact that employers should not be required to pay more than $200 per day or $10,000, and this is for the leave that's taken because of the school closings. They clarified that. And also, for any other, for paid sick leave, the maximum amount that can be paid is $511 per day, or up to $5,110. Also, they provided that if you laid off employees on or after March 1st, 2020, and they're rehired back, they will also be eligible for paid leave. The next section talks about advanced refunding of credits. Remember, if you do have to provide paid sick leave or paid family leave, the government will pay you back, and generally it's going to be paid back when you file your when you have to pay your income tax or Social Security payments. Now what they're saying is you can actually, when you do withhold it from wages, instead of paying the government, you can pay yourself. And there's 2 ways of doing it. You can claim it on 941, or there's a form that you can claim it, and it's a form 7200 that you can actually, if that payment is not enough to reimburse yourself for it, you can actually get early, and this section of the law provides for that. So if any amounts that you withhold from wages that you would normally pay is not enough to pay yourself, you can actually get an advancement on that by filing form 7200. And that the instructions and the form are already out. Now, also with the CARES Act.
Let's pause for a couple of questions.
Yes, sir.
Okay. Deborah asks, if you are cutting hours, however you are making people whole, can the employee apply for UI benefits?
No.
Thank you.
If they're being paid whole, no, they can't.
Thanks. Our next question comes from Mary Lou. For CARES Act Section 2301, how do you calculate your average number of employees? Is it from the 941 quarterly tax filing from the previous year or from ACA Form 1094C?
It's when the leave is taken.
Okay.
It's when
Thank
the
you
leave
very
is
much.
taken.
Great. Let's proceed.
No problem. Also, another change, and this was important, the government has given the DOL authority to delay any requirements under ERISA. So that means 5500 or plan document. So anything in ERISA, the DOL temporarily can postpone any filings. And so far they have not done so. But again, they said the DOL can delay any filings for a year. So again, nothing officially has been coming out yet. I'll cover that in the next section in more detail. But the government, the Congress just gave the DOL authority to do so. Also, if you sponsor a pension plan, a defined benefit plan, and you have to make required minimum contributions, those are suspended until January of 2021. But again, contributions would be due interest accrued from the plan's effective date. So again, they delayed that. Now, another change is 3701 for the years 2020 and 2021. Now you can offer telehealth services, telemedicine services, and it will not, high deductible plan can do so, and it will not make your employees ineligible to make a HSA contribution. There were some questions in the past if you paid for telemedicine services, because technically to be eligible for an HSA, you can't provide any paid services below the deductible for a high deductible plan. They're in section 3701, they're creating a special exception. All right. So again, this is for 2020 and 2021. The most important change is section 3702. What they've done is that now your health FSA, your HRA, and your HSA can reimburse over-the-counter drugs, including Mistral Care products. This was what the law was in 2020, before 2014, because those plans could reimburse those before that. Now they've eliminated the ACA restriction, and starting in 2020, your health FSA can actually now, just like they did in 2013 and before, reimburse over-the-counter drugs. Now the question comes in, well, has there been any guidance in regard to this? And the answer is no. It would be any over-the-counter medication or supply that would qualify under Code Section 213D as a medical expense. So again, the rules, I would think, and again, they may come out with something very shortly to explain it, but I would think the rules from before 2014 would reappear again, and those rules would then, moving forward after January 1st, 2020, would apply. In regard to the loan provisions, there's executive comp limitations. That's what this section applies to. So if you're applying for the loan, there are various different restrictions on what executive comp can be paid. So if a company accepts certain emergency direct lending from CARES, the company must agree to certain limitations on compensation, salary bonuses and equity, and other financial benefits paid to officers and employees that remain in effect until 1 year after the loan ceases. These limitations are: no officer employee whose total income in 2019 exceeded $425,000 may receive compensation greater than the amount received in 2019, may receive severance benefits upon termination which exceed 2 times the maximum total compensation received in 2019. Additionally, no officer or employee whose total compensation exceeds $3 million may receive compensation during any 12-month period greater than $3 million, plus 50% of any amount greater than $3 million received in 2019. So if you're applying for the loan, these are the restrictions. Lauren, are there any other comments or questions?
Yes, we have one more question. Tracy is wondering if an employee goes on vacation and knowingly travels and returns with COVID-19, is the employer responsible for any compensation?
Yes, absolutely. If they're sick and they were working, they're responsible. Absolutely.
Thanks. Let's move on.
Now, again, basically, you have to have the symptoms of COVID-19 or be quarantined by a doctor to be eligible. And again, just because you think you have coronavirus is not enough. So you have to have symptoms or be quarantined by a doctor in order to qualify, or you're caring for someone who has a coronavirus. Because of the recent crisis, a number of different filing, reporting, and compliance requirements have been delayed or eliminated. So let's go through that. Let's look at this one. So this is from the Internal Revenue Service, which postponed the due dates for certain federal income tax payments from April 15th until July 15th, 2020. And the due date of paying the 10% additional tax for amounts included in income from distributions and pension plans were extended to July 15th, 2020. If you have a 401k plan and that employee made excess deferrals in the plan year 2019, those excess deferrals and income must be taken out no later than April 15th in 2020. The April 15th deadline was not extended. And the deadline for making contributions for IRAs was extended to July 15th, 2020. The same thing as this slide indicates for HSAs. Now, in addition to that, now the tax payments were delayed. They later came out and indicated that tax returns were delayed from April 15th, 2020 to July 15th, 2020. Taxpayers can defer income tax payments due on April 15th to July 15th. So both your tax return and any estimated payments due on April 15th are now due on July 15th. Now, you don't have to do anything to get this extension. You don't have to file anything to get this extension. It is automatic. So if you're self-employed and you had estimated payments, it will not be due until July 15th. Now, what's interesting about this is that there's another estimated payment that is due on June 15th, and so far they have not delayed that. Also, in notice 2022 provides a penalty relief in regard to the employee's deposits of federal income taxes. In that situation, they've indicated that those income taxes are not due for the period. So in notice 2022, the IRS provides waiver of penalties for failure to make a deposit of taxes for employees required to pay qualified sick leave or family leave, and a waiver of penalties for failure to make any deposits. So those have been waived too. Now, what's interesting is what has not been delayed. There was a filing form 1094 and 1095 that were due March 31st. that was not delayed, but you could get a 30-day extension by filing a Form 8809 by March 31st. If you didn't do it, your returns are late. Form 5500 has not been delayed. It's generally due the end of the 7th month after the end of your planned year. You can get an automatic extension by filing Form 5558. So if you have a form that is due by the end of this month, you can file that Form 5558 and get an extension. There's also a filing for CMS for Medicare Part D. That was due on March 31st. That was not delayed. Mandatory Medicare secondary payment, those are due every quarter. I have not seen any extensions for that. And also, if you're a MIWA, multiple employer welfare arrangement, the forms are due generally March 31st, and I have not seen any extensions for those. All right, let's look at some common compliance questions that I'm receiving from employers. The basic question, what is the difference between a layoff and a furlough? A furlough basically is a reduction of hours or a no hours for a very short period of time. A layoff is more permanent. Now, what's important if you're still working, you can still be entitled to paid leave if you're, but if you're not working, whether it's a furlough or a layoff, you still don't get the leave. May an employee that is laid off or furloughed be covered under the medical plan? And again, the answer is yes. But if there's a no hours during the furlough or the layoff, you have to get approval of the insurance company or the stop loss carrier, because technically most contracts have a requirement, and many insurance companies are extending coverage until the end of April. Now, the question that many employers have in this situation, if you're going to extend coverage, is how are you going to collect that the employee's portion of the medical premium? So if you still treat them as active and they have to pay 20 or 30% of the premium, how are you going to collect it? And there's 3 ways of dealing with that. The first thing you can do is just pay it. Say, we know it's a stress time, we're going to pay the entire premium. The second is say, we're going to extend coverage, but you have to send me a check by a specified date. And if you don't send it to me, I'm sorry, but the coverage is not extended. Or thirdly, you can say to the employees, we'll collect it when you come back, and we'll collect it on a pre-tax basis. That would be similar to what you would do under family and medical leave. And it's up to you when you want to offer your employees COBRA. You have to check with your employer, you have to check with your insurance company or with your third party, with your stop loss carrier about what they're comfortable when you have to extend COBRA. And I'm hoping that discussion doesn't happen, because everybody's called back in a few weeks. So let's see what happens. If the employer reduces an employee's salary, is that a qualifying event to change his or her cafeteria plan election? And technically the answer is no. Drop in income is never a qualifying event. Now, if the premium goes up, that's another matter. But no, that's not a qualifying event technically. If an insurer allows an employee who waived coverage to enroll in medical coverage, is that a qualifying event to allow an employee to join the cafeteria plan? Again, the answer is no. That's not one of the recognized events that will allow an employee to join the cafeteria plan. Another question, are part-time employees eligible for unemployment? Check your state. Many states are extending unemployment to gig workers and also part-time workers. So check your state unemployment website to see. If the employer reduces the employee's hours, are they eligible for unemployment? And again, chances are yes. And again, the part-timers are only eligible because many times they have a income threshold about when you're eligible. So again, generally they can be, but it depends how much they made. Another question, can the employer take the employee's temperature? I mentioned this before, and the answer is now yes. But again, employers have to realize that you could have the coronavirus and not have a temperature for a period of time. Now, what action can an employer take if an employee refuses to come to work? If you certify, and this has happened, I get this question almost every day. And it will depend on whether you can certify to your employee that your workplace is safe. Now, in this situation, especially if the worker is older, they have an underlying health condition, they're scared to come to work, you can give them a leave of absence if you want. But just because they're scared doesn't mean they're eligible for paid sick leave. So you can accommodate them because they have an underlying health condition. But again, if you can certify your workplace is safe, you have no problem. What can an employer require if an employer indicates that a family member was exposed to coronavirus? You can ask for documentation. You can require a test if they're available in your area. But again, document the fact of whether that person was exposed to coronavirus, and you should require a doctor's note to do that. Are there any questions?
Larry, we do have a question. This one is from Ashley. Going back to the layoffs and furloughs, how long can you keep employees furloughed?
There's no specified time, but usually it's short term. And defining that, I think it depends on. I think basically it's you're furloughing them, and you're going to call them back within a short period of time.
Thank you. I don't see any other questions at this time. Everybody, you will receive a copy of the slides as well as a recording of the complete webinar within the next 1 to 2 business days. So keep your eye out on your email for that. And Larry, thank you so much for the informative webinar, and we look forward to hosting again soon. And I hope everybody has a great rest of their day along with a great weekend and keeps healthy and safe.
One other note, the next seminar is May 13th, and we're going to talk about the employee cafeteria plan change in election rules, which has become very important now. We're going to review those. So take care, everybody. Bye-bye.
Thank you. Goodbye, everybody.